embracing the wisdom of the kicking bearish pattern, we uncover a powerful indicator of market reversal, pointing to a potential shift from a bullish to a bearish market phase. This pattern is identified by a significant gap between a final green candlestick and a subsequent red one, signaling a strong momentum shift. Understanding this pattern is crucial for investors as it helps in making informed decisions on when to exit or enter markets to capitalize on potential downturns. The kicking bearish pattern's uniqueness lies in its stark representation of sentiment shift, making it an essential tool in a technical analyst's arsenal. Recognizing this pattern early can be the key to forecasting market downturns, enabling investors to adjust their strategies effectively. It serves as a reminder of the market's volatile nature and the necessity for constant vigilance and adaptation in investment approaches. The ladder top pattern is a bearish reversal indicator that often appears at the end of an uptrend, signaling a potential shift in market direction from upward to downward. It is characterized by a specific structure in price movements over a series of trading days. Typically, this pattern involves a steady climb in prices, followed by a plateau or a series of small, successive peaks, indicating a struggle to push higher. This is eventually followed by a notable decline in price, marking the reversal. The initial climb represents the last efforts of bullish investors to drive prices up, while the plateau or series of peaks suggests exhaustion among buyers, and the subsequent fall in prices illustrates the gaining momentum of bearish sentiment. Understanding the ladder top pattern begins with recognizing its formation on price charts. Traders and analysts observe for a sequence where there are at least 2 or 3 consecutive increases in the stock or assets' closing prices, each day reaching a new high. These consecutive highs are followed by a day when the price fails to reach a new high and either closes at a similar level to the previous day, forming a top, or shows a slight decline. This signals that the buying pressure is weakening. Finally, the appearance of a significant drop in the closing price marks the pattern's completion and indicates that sellers are now in control, leading to a bearish outlook for the future. Interpreting the ladder top pattern requires attention to the volume of trades as well. An ideal ladder top formation would show decreasing volume during the plateau or series of small peaks, further confirming the decreasing buying interest. When this pattern is identified, it suggests that it might be time for investors to consider defensive strategies such as setting stop-loss orders, selling off their positions to capture remaining gains, or avoiding new buys until the market shows signs of stability or a new bullish trend. In summary, the ladder top pattern is a valuable tool for investors who are adept at reading chart patterns, offering a preemptive signal of a potential downturn in the market or a specific stock. By acting on the indications provided by this pattern, investors can make informed decisions to mitigate losses or capitalize on upcoming trends. Identifying a ladder top pattern involves observing the stock charts for a specific formation that suggests a bearish reversal, especially after an uptrend. This pattern emerges over 5 candlesticks. It starts with a notable upward trend where the price of the stock increases significantly. The first 3 candlesticks manifest as long and bullish, with each closing higher than the previous. These are followed by 2 smaller and bearish or neutral candlesticks that indicate a slowdown in the uptrend and possible reversal. The presence of the smaller candlesticks shows hesitation in the market, hinting that the bullish trend may be losing momentum. To effectively spot this pattern, one should look for the first 3 candlesticks to make new highs successively, signaling strong buying pressure, followed by the latter 2 failing to reach the same peak levels, suggesting diminishing buyer enthusiasm. This configuration provides a visual cue that the previously bullish sentiment may be waning, potentially leading to a downturn or reversal in the stock's price direction. The latter top is considered a bearish reversal pattern that typically appears at the end of an uptrend. It signals that the current uptrend may be losing momentum and a potential reversal to a downtrend could be on the horizon. This pattern is identified by a specific sequence in price movements, where after a strong upward trend, there are a series of small trading ranges that resemble the rungs of a ladder. It's the appearance of these rungs after a prolonged increase in price that alerts traders to a possible shift in market sentiment from bullish to bearish. Deciphering market sentiment is crucial for investors and traders alike, as it provides insights into the prevailing mood of the financial markets. Understanding market sentiment can give a glimpse into future market movements. The ladder top pattern plays a significant role in this context by acting as a visual clue that bullish sentiment may be waning, and that caution is advised for those holding long positions. Essentially, spotting this pattern could help traders and investors make informed decisions about whether to hold, sell, or adjust their investment strategies accordingly. The consideration of such patterns is integral to technical analysis, which relies not just on numerical data, but also on chart patterns to predict market movements. Recognizing and correctly interpreting bearish reversal patterns like the ladder top can be a valuable skill, helping to navigate the uncertainties of the market with more confidence. The ladder top pattern is a bearish reversal indicator commonly observed at the end of an uptrend. This pattern forms when prices reach their peak and then begin to decline, signaling a potential shift in market sentiment from bullish to bearish. To recognize this pattern, look for a sequence of trading sessions where the market shows strong upward movement but then starts to falter, with prices struggling to climb higher and eventually starting to fall. The appearance of such a pattern suggests that buyers are losing control and sellers are starting to dominate, potentially leading to a reversal in the market's direction. Understanding the ladder top pattern and its implications can be crucial for investors aiming to make informed decisions about when to sell or adjust their positions to mitigate risk in anticipation of a downward market movement. The ladder top is identified as a bearish reversal pattern and typically emerges at the end of uptrends. Recognizing this shift involves observing certain telltale signs that hint at a forthcoming change in market sentiment. A key factor confirming the turn from bullish to bearish trends involves observing increased trading volumes coupled with price declines following the pattern. This transition indicates that sellers are gaining strength and buyers are losing momentum, thus suggesting a potential downturn in the market. Understanding and confirming the turn demands attentiveness to both price movement and trading volumes. An increase in trading volume signifies a heightened interest in the asset at its current price levels, while the subsequent price drops reveal that this interest is in selling the asset, not buying it. As this dynamic unfolds, it becomes crucial to note any patterns that deviate from the norm, as these are often the first clue to a shift in market direction. The ladder top pattern is recognized as a bearish reversal indicator, which generally appears at the end of an uptrend in the market. This pattern consists of several candles, showcasing a shift from bullish to bearish sentiment among investors. Initially, the pattern starts with strong upward momentum, indicated by a series of positive candles that reflect ongoing buying pressure. However, this trend begins to wane as the pattern progresses. Traders observe a gradual decrease in the size of bullish candles, or even the appearance of bearish ones, suggesting a weakening in buyers' conviction. Ultimately, the final candle in the sequence confirms the reversal, closing lower than previous candles, signifying the bears have taken control from the bulls. When assessing the reliability of the ladder top pattern, it is crucial to consider multiple factors. Volume plays a key role. An ideal bearish reversal would be supported by increasing volume, especially as the pattern nears completion. Higher trading volume on bearish candles validates the change in market sentiment from bullish to bearish. Additionally, the pattern's context within broader market trends can significantly impact its reliability. For instance, a ladder top pattern forming after a prolonged and steep uptrend might signal a more potent reversal than one appearing after a modest rise. Furthermore, the integration of technical indicators can enhance the predictive power of the ladder top pattern. Tools such as moving averages, relative strength index, RSI, and support and resistance levels, when combined with this pattern, can offer a more comprehensive view of market conditions, allowing traders to make more informed decisions. In summary, while the ladder top pattern can be a powerful signal for a shift from bullish to bearish momentum, its effectiveness is not absolute. Traders must evaluate this pattern in the context of volume, overarching market trends, and supplementary technical indicators to gauge its reliability fully. This holistic approach enables a more accurate interpretation of market dynamics and potential future movements. The ladder top is recognized as a bearish reversal pattern that usually emerges at the end of uptrends. This pattern plays a significant role when combined with technical analysis, providing a strategic advantage in forecasting market movements. Essentially, technical analysis involves studying past market data, primarily price and volume, to predict future price movements. When a ladder top pattern is identified, it signifies that the momentum of the uptrend is weakening, suggesting that a reversal may be imminent. In the context of synergy with technical analysis, the identification of a ladder top pattern can enhance the decision-making process. Analysts might look for confirming signals, such as an increase in trading volume or other technical indicators that align with the reversal signal provided by the ladder top. By integrating this pattern into a broader technical analysis framework, investors can make more informed decisions about when to enter or exit a position. The ladder top serves as a cautionary signal, indicating that it might be prudent to consider taking profits on long positions or preparing for potential downward movements, thereby helping to mitigate risk. This synthesis of pattern recognition and technical analysis tools empowers investors to navigate the complexities of the market with greater confidence. The ladder top pattern is a technical analysis term used to describe a specific bearish reversal pattern that often appears at the end of an uptrend. This pattern signifies a potential shift in market sentiment from bullish to bearish. It is identified by a series of candlestick bars that resemble the steps of a ladder, hence the name. Typically, this pattern starts with strong bullish momentum, indicated by a significant upward move. However, as the pattern develops, the upward momentum begins to lose strength, and the price starts to stabilize or decline slightly, forming the steps of the ladder. Each step down indicates weakening buyer interest and increasing seller pressure. Navigating pitfalls in the context of this pattern involves being vigilant about false signals and understanding market context. Not every ladder top pattern will result in a bearish reversal, and sometimes what appears to be a formation of this pattern may not fulfill the criteria upon completion. Thus, it's crucial for investors and traders to consider other market indicators and the broader market context before making decisions based solely on this pattern. For instance, confirming the pattern with volume analysis or other technical indicators like moving averages can provide additional insight into the strength of the anticipated reversal. Moreover, understanding the overall market trend and considering fundamental factors can help avoid pitfalls associated with relying too heavily on one pattern or signal. The ladder top pattern is recognized as a bearish reversal signal, often encountered at the culmination of an uptrend. This identification is crucial for investors looking to understand the shift from a prevailing upward market trend to a potential downward trajectory. As part of the strategic applications of recognizing this pattern, investors are guided in making informed decisions, such as when to consider exiting long positions to avoid potential losses or when to initiate short positions to capitalize on the expected downturn. Understanding the ladder top involves recognizing a specific formation in price charts where after a strong uptrend, the market shows signs of hesitation with smaller upward movements and possibly increased volatility, indicative of a decrease in buying pressure and an impending shift in market sentiment. Recognizing these patterns involves analyzing candlestick formations, volume, and other technical indicators that suggest a weakening of the current trend. In its application, strategic decisions hinge on the validity and confirmation of the pattern. It is important for investors to wait for confirmation beyond the initial formation, as premature conclusions can lead to misjudging the market's direction. Once confirmed, protective measures such as setting stop-loss orders or taking profit can be considered to manage risk effectively. Additionally, understanding the context in which the ladder top forms, including market conditions and external factors, enhances its strategic use, making it a valuable tool for technical analysis in financial market operations. The ladder top is recognized as a bearish reversal pattern that typically emerges at the culmination of uptrends. This pattern is instrumental in signaling that the current uptrend may be losing its momentum, thus indicating a potential shift towards a downtrend or a significant price correction. In essence, it is a warning sign for investors to reassess their positions and potentially prepare for a changing market environment. Exploring the variations of this pattern is crucial for a comprehensive understanding. Although the core structure of a ladder top remains consistent, slight differences can impact its predictive reliability and the subsequent market movement. These variations often result from differences in the volume of trading, the exact formation of price bars, or the context within which the pattern forms, such as the preceding trend strength. For instance, a ladder top pattern that forms after a subdued rather than a strong uptrend may not signify a reversal with the same degree of certainty. Understanding these nuances allows investors to refine their assessment of potential market shifts. By closely analyzing the variations within the context of broader market indicators, investors can make more informed decisions, balancing potential risks against the likelihood of continued gains. It emphasizes the importance of vigilance and adaptability in investment strategy, as the financial markets are inherently dynamic and subject to changing conditions.